Hey everyone. Today I'm going to talk about the volatility of the stock market and how I make money in the stock market using the VIX, the VIX, to guide my trading. This is not financial nor professional advice. This video is for entertainment only. What is the VIX? The VIX is a measure of volatility of the S&P 500 options. The reason they use options is people buy calls, which indicates they want to buy a stock, or they buy puts, which shows they believe the stock is going to go down. It's a wager that the stock is going up with calls and a wager that the stock is going down with puts. And so it's a pretty good measure of what people expect the market to do. And so it's a measure of the volatility. How likely is it for the market to vary a lot? There's another volatility index called the VXN. The symbol I was talking about was the VIX. That's the measure of variability on the S&P 500, and its symbol is VIX. The VXN is a measure of volatility of the 100 largest companies on the NASDAQ, which basically is the QQQ, which is the 100 largest companies on the NASDAQ. And I like to short the market at the present time by using the index SQQQ. And I've been very successful with that because of the high volatility of this market, as we will see. So what you see here is the VIX, which I presented because I don't use it as much. I use the VXN because I do the SQQQ. But you will see the VIX referred to much more often by other people to talk about the variability in the market, and they tend to be highly related to one another. So to some extent, it doesn't almost matter that much. They tend to be almost as volatile, one or the other. I basically play the hills and valleys of this. And I found even on days where the QQQ, the 100 largest companies on the NASDAQ, have gone up, and that's bad for me because I'm shorting it, okay? But I play it by trying to catch the low and sell at the high for the SQQ, how that price is moving. And I've been extremely lucky, but I go with fundamentals, basically sometimes you just get ridiculous news, okay? Wednesday is a perfect example. All day they were waiting to look at the minutes of the Fed. Oh my God, they've been telling us for a month now they've been telling us for a couple of months exactly what they're going to do, and they've been doing it. But I think they got the impression that, hey, there might be a hope that they might accidentally pause in September. Okay, so you got the news that they're going to increase for a couple of months by a half a point each time, but they might pause or not do as much in September. Wow. Are we just looking for any scrap of good news we can possibly muster? But I traded it on that day and doubled down, and I just happened to catch the exact bottom of the day and just happened to catch the exact top of the day. And I go by the momentum, and I could say minute by minute, but it's more like second by second. Okay, that's how closely I follow it. And I think to be successful at this, that's the way you have to follow it. And that's why I don't really recommend anybody do what I'm doing, because it is a ridiculous amount of work, but it's been very profitable for me. and I made like $15,000 on Wednesday on a day that should have been against me. But like I say, I've gotten the hang of this. I think I've gotten it down. I don't think I've had a losing day in all of May, and just about no losing days in April. April at first was kind of shot up for a while. And so, you were kind of trying to play that, which was very difficult. But May has been like a piece of cake. And I think there's reasons that the market's going to continue to be bearish. But we're at the point where it's been so good for the bears that you might get a reversal, and you might get a reversal rally, and these rallies can be intense, and it might shoot up for a while here. But unless we get fundamental good news with it, I'm probably not going to totally believe it unless it hangs in there for a while. That's been the problem. We get these spikes, but there's no follow through. And I think we've been down for like going on 8 weeks in a row of bad news of the week ending on Friday at a new low. So with this trading now, I need to see the market close positive for the week on Friday. If that doesn't happen, this is a nothing burger. The one day, good day we had of the market going up on Wednesday means nothing if it isn't followed through. But if we get follow through on Thursday and Friday and it closes up positive, I'm going to hesitate to short after that and might consider going positive. It would be the beginning of an argument for things going positive, but it has to be accompanied by some fundamental good news. We can't just have this constant stream of bad news. Just how bad can things get? Apparently, things can get very bad if you're in the wrong country during this time. In Turkey, they have 70% inflation, 70%. And I guess, the market going down should be disinflationary, and the crypto markets going down should be disinflationary. At least people aren't making money on stocks and crypto and then buying a house and a car much anymore. And so that's disinflationary. You would think enough money has been taken out of the economy, but I keep hearing that the earnings they expect to hang in there, and so that tends to be stimulative. There's so many cross currents going on right now. The market is pausing on the bearishness, and it isn't exactly certain which way it wants to go. But I need to see this Friday that the market ends positive for the week to break the weeks, months going on of bad news for the stock market at the end of the close on Friday. And a simple way to see have we really changed? Is it really going to change fundamentally? A simple way to do that is I want to see Apple go above at least 150, preferably above 160. And I want to see Tesla go above 750, I will say. If those two things happen, that's the second stage of the argument that it might be time to jump back in. And then maybe with a little good news, like the war ends in Ukraine, something that massive, maybe then I will be doing the TQQQ, which is the triple QQQ. It's the bullish fund. You get $3 for every dollar that the QQQ index goes up. The QQQ is the 100 largest companies on the NASDAQ. And so, you can do a whole investment strategy, I think, just using QQQ, the triple QQQ, and the shorting the QQQ. And usually you just do the QQQ because normally we have a normal market, but the world just hasn't been normal. This has been like the 7 plagues are upon us, and now we got monkeypox. Of course, I hope that's a big nothing burger, and probably it'll end up being a nothing burger. But I don't know. We got famine coming in some parts of the world. But Apple and Tesla doing well would go a long way towards convincing me. Thanks for listening and watching. Be sure to like and subscribe and hit the notification bell if you want to be notified for future videos. And I will plan to see you in the future, hopefully. And good luck to us all.